Hey everyone, and welcome to this explainer. Today, we're going to dive into what is honestly a phenomenal growth story, Himadri Specialty Chemical. We're looking at an incredible evolution here. We're tracing a company that is successfully pivoting from a legacy coal tar distiller, into a highly advanced materials powerhouse. Founded back in 1987, this Kolkata-based enterprise has literally fundamentally transformed its DNA to align with the modern energy transition. And, well, the data we're going to look at today proves that their strategy is working on a massive, massive scale.
Okay, here's our roadmap for today. We'll kick things off with their recent market milestones, move inside the business model, break down their Q1 results, explore their aggressive expansion strategy, and wrap up with peer comparisons and analyst forecasts. Let's get right into it.
Section 1, Market Milestones. Let's look at the headline numbers that are suddenly putting this company on everybody's radar.
Now, the sheer scale here is just fascinating. Himadri recently became the very first Indian firm in its specific sector to hit a staggering market capitalization milestone of 36,450 crore rupees. For a company operating in industrial chemicals, breaking past this kind of valuation threshold signals something vital. It means the broader market doesn't just see them as a traditional chemical manufacturer anymore. They're being recognized as an advanced materials innovator with some serious future potential.
And what's driving that massive valuation? Unbelievable momentum. In their recent first quarter, they posted their highest ever quarterly revenue, jumping a massive 28% year over year. They are currently doing over 1,432 crore in a single quarter. When you pair a historic market cap with sustained high double-digit top-line growth, you've got the textbook definition of a business in a breakout phase. Moving to Section 2, inside the business model. Because, it's one thing to see the revenue, but it's another to actually understand how they capture it. So the absolutely crucial point here is their foundational business model. They utilize an in-house R&D team of 94 dedicated specialists to transform basic coal tar into highly specialized, high-value chemical derivatives. They aren't just processing bulk raw materials. They are meticulously engineering advanced carbon materials, specialty oils, and components specifically tailored for modern industrial needs. This intensive R&D-heavy backbone, that is exactly what creates their deep competitive moat. A major pillar of this whole operation is carbon black. Now, this isn't just everyday soot. It's a highly engineered critical material that's experiencing surging global demand. In fact, the total addressable global demand is projected to hit over 17.1 million tons by 2030, growing steadily at nearly a 3% compound annual growth rate. Carbon black provides essential reinforcement in tires, structural integrity in plastics, and most importantly for Himadri's future, it is an absolute necessity for advanced lithium-ion battery components. Check out this export mode. It's globally diversified, with nearly 19% of their revenue coming from over 54 countries worldwide. While they absolutely maintain a dominant stronghold domestically in India, capturing over 81% of their revenue there, having this expanding global footprint proves something important. It proves that their advanced materials meet really strict international quality standards all across the globe. All right, Section 3, Q1 results. Let's see how this highly engineered model translates into record-breaking financials. These numbers tell a story of really aggressive traction. We are looking at incredibly consistent double-digit growth across the board. Top-line revenue, operating profit, and net profit. Just notice how closely those growth percentages track together. Revenue is up 28%, operating profit is up nearly 27%, and net profit is right there, up over 26%. That kind of parity indicates highly efficient scaling. The growth we're seeing here is driven by a very favorable product mix and a deliberate ramp-up of their new energy materials business. Context is absolutely crucial here, though. You might notice a slight moderation in EBITDA margins, dipping from 22% down to 20%. Now, it is vital to understand that this isn't a fundamental weakness. Actually, scratch that. It's just the reality of doing business at this scale. It directly reflects the necessary capital expenditures associated with scaling operations and driving aggressive capacity expansion. When you're building out the infrastructure required to dominate a global supply chain, well, you have to deploy capital. Which perfectly brings us to Section 4, Expansion and Battery Strategy. Let's look at management's incredibly ambitious plans to pivot into energy and advanced mobility. Their multi-year goal is incredibly clear. They are actively shifting gears toward high-value growth to drive business resilience, and they have a stated objective to more than double their overall profitability by FY28. To do this, they're maximizing output from their core business while also launching new retail offerings, like their branded Naphthalene balls, Durofresh. We can actually anchor their execution strategy right along this timeline, which shows a really swift, phased progression. By Q3 FY26, they're expanding specialty carbon black. Moving to Q2 FY27, they implement forward integration to manufacture anthraquinone and carbazole. This is huge because it reduces India's reliance on chemical imports. And then the real game changer hits in Q3 FY27 when their Phase 1 commercial plant for lithium iron phosphate, or LFP, cathode active material officially commences operations. And the physical scale of this expansion, it is literally breathtaking. Through a 220 crore rupee brownfield investment, Himadri is expanding capacity to an incredible 130,000 metric tons per annum. Once completed, this will yield the largest single-site specialty carbon black facility on the planet. This is a classic example of creating an insurmountable competitive moat just through sheer scale and operational efficiency. Finally, Section 5, Peers and Forecasts. Let's contextualize where Himadri sits within the broader industry right now. When we compare market dominance in India's carbon black race, Himadri commands a really significant valuation premium over its peers. Take PCBL Chemical, for instance, a very strong company with a broad performance-driven portfolio and a market cap of roughly 11,860 crore rupees. Himadri, depending on the exact trading day's metrics, has been commanding market caps ranging from 23,000 crore all the way up to that 36,000 crore milestone we talked about earlier. This massive premium is largely driven by Himadri's strategic forward integration directly into the incredibly lucrative EV battery ecosystem.
Analysts tracking the stock have mapped out 3 distinct valuation scenarios for 2026. They impartially outline the potential upside catalysts against the real execution risks. The base target suggests a price of 840 rupees, looking at a potential 20% upside from a baseline current market price around 700. The bull case pushes up to 1,000 based on policy uplifts and strong FY27 earnings. But we have to look at the bear case of 560 too. That's a critical reminder of risk, resting on the potential for internal project execution delays or external factors like a slower than expected global adoption of EV battery materials.
So, as we wrap up this explainer, I want to leave you with a provocative thought to chew on. We've seen the data, the aggressive capital expenditures, and the timeline, but as Himadri transforms from a legacy chemical producer into a global advanced materials powerhouse, will their massive bet on the EV battery ecosystem secure their dominance in the next industrial era? Or will unforeseen shifts in global technology catch them off guard? Keep a close eye on how they execute this capacity expansion over the next 2 years. Thank you so much for joining me on this deep dive into Himadri Specialty Chemicals growth story. Keep learning, and I'll catch you on the next explainer.